Every year we put together a forecast for the year in front of us. While there are lots of economic statistics that we could offer an opinion on, we limit this forecast to only 3 pieces of information. Gross domestic product, which measures the growth rate for the U.S. economy, commonly called GDP. We also forecast the interest rate for the U.S. Treasury 10-year note and the stock market, using the S&P 500 as our proxy. We forecast that U.S. GDP will grow at 3.2% in 2018. While final numbers are being gathered, the GDP growth rate for 2017 most likely will come in around 2.6%. The U.S. last had a year in which annual GDP growth was 3% or higher in 2005, when the GDP growth rate was 3.3%. Interest rates. We see interest rates as measured by the U.S. Treasury 10-year note reaching a level of 3 to 3.2% over the course of the 2018 year. The current interest rate or yield on the U.S. 10-year is 2.47%. Some of the factors that give us confidence in our outlook regarding interest rates are improving economic strength, 2 to 3 interest rate increases by the Federal Reserve Board in 2018. We have a high employment rate, which should put pressure on wages to move higher. The new tax law should provide a short-term boost to economic growth, and the impact of the Federal Reserve's actions to begin the unwinding of their debt portfolio also ought to push interest rates a little higher. Our stock market forecast. We anticipate an additional 10% move higher in the stock market. That would put the S&P 500 index at the 2,900 level. We finished the 2017 year just under 2,700. During the course of the year, we could see a correction in the stock market in the neighborhood of 10%. We don't believe that the correction will extend beyond 2 to 3 months, and we don't think that will mark the beginning of a bear market. A few things to consider, things that we believe have at least a 30 to 40% chance of occurring during this year. As difficult as it has been to pass legislation with a Republican sweep of the White House, Senate, and Congress, it looks to get even more cantankerous and difficult to pass legislation as we head into the mid-year elections. The U.S. has been relatively unscathed by the horrors of terrorism for quite some time. While we hope that all nations could be free of violence, we fear that such activity may become more brazen and closer to home. Finally, we could get the perfect mix of economic growth, pricing flexibility, and low interest rates to create yet another strong move up in the stock market. We're grateful to work with you. May you and your family enjoy good health, success in your individual and business endeavors, and the comfort of peace in your lives throughout the coming year. Happy New Year.